Hello, welcome everyone. We've done a series of videos. I think the last one we did on the YouTube channel was about a day trade setup using the volume indicator on convergences. And then we did one describing what we and how we picked up a beautiful signal on the NASDAQ 100, which has had one of the biggest 3-day declines in, well, a long time. And so what we have going further is more trade signals and new trading setups using both the Algo Optimizer version 16 and some of our other work. So let's get started. But before we do, just let me take a quick second here to have you read this risk disclosure statement. For you folks that are not familiar with trading, just remember that trading does involve risk of loss. And for you veterans, you all know this is a numbers game. It's not, every win is not is subjected to the last outlook or the last result. In other words, you can't expect the same results on every single trade. Okay, so let's get moving forward here. What I wanted to share with you guys is a couple things that I talked about months and weeks ago, and it's called bearish divergence using some of our really popular indicators, in which number one is available on Thinkorswim. So I don't want anyone to think that it's just a TradeStation exclusive. And it's called the Person Market Catcher. We did an event at the Traders Expo on this. And I just wanted to share with you guys a short-term analysis. This is a small little company. You might be familiar with it. U.S. Food Holdings didn't have a very good outcome on earnings today, but you know, as you look at this price advance and it's climbing, you'll notice that here's the Person Market Catcher on a daily basis. What it shows is divergence. It means that as the price is going up, it's not outperforming the overall market, and it's showing actual relative weakness. It's hidden weakness. There's a divergence forming. As the market also, as you can see clearly moving up, the relative strength or Person Market Catcher is declining. I mean, today was a really bad day, but it had been declining. It made subsequent lowers highs on this whole rally. You had a little doji-ish pattern here on Thursday. Friday, the market traded a little lower, but then today, wallop. Now, here's an interesting concept, something that I have weaned most of our traders off of. I've done this for a long time, thanks to John M. I give you props. You know who you are, John, if you're listening. John M. asked me at a seminar well over a year ago, he said, John, which volume indicator do you like? The one that you created or on balance volume, since you've been promoting this thing for a decade? Well, the fact is, many of you are probably familiar with on balance volume. If you're a Thinkorswimmer, I helped really popularize this in my book that came out in, I don't know, when was that, 06 or something like that, 05? And then we did a lot of follow-up seminars, webinars, and things of that nature back in 8 and 9 and showed the power of that. And it really became a phenomenon throughout the Thinkorswim community. But through the new decade in 2010, 11, 12, 13, something happened, and I don't know if it was options or more ETF trading, whatever, but on balance volume is not giving as reliable signals as it once did, folks. And here's a classic example of what I've been teaching and sharing with everyone. If you notice, here's on balance volume on a weekly basis. It's going up, giving everyone a false sense of security that the rally is on strong volume. Whereas if you notice this indicator here, it's not making stronger moves, and the momentum is actually declining. So yes, this is a VM. It says VM indicator, JP. It's a proprietary indicator. Comes along with my Person's package on TradeStation. It really gives phenomenal signals. And what it does is it helps to share with us that the volume momentum is declining, even though it looks like it's going up. These divergence patterns really set up between the PMC, relative strength indicator, volume indicators have really helped set up some phenomenal trades, as one that I gave out in the queues on both on just a simple tweet to help you guys out, as well as showing you the power of some of the other signals that develop. This is this is a disaster right here, but if someone would be long, we would not have been long this stock. I would have been warning about this, or at least if someone liked it, this would have been. And again, I think this is what's happening in this earnings cycle, is that stocks that show divergences are more susceptible for major declines. If you're one of my clients, you've been hearing me say that till I'm blue in the face. I've written about it. Markets with these bearish divergences, when they get bad earnings, they are susceptible for major declines. All right, so let's take just a quick sampling of others that had that type of setup. All right, I know this one looks familiar. It's Facebook. And as you can see, let's take a look and gander over here to the bottom left. You can see same indicator, volume indicator. Person histogram, we'll talk about that another day. But we want to compare the volume indicator against the on-balance volume while we use the person market catcher. So real simple. Facebook's breaking out, looks great. Something like US Food Holdings I just showed you, right? Except for it actually has a very similar pattern. Look at the relative strength, the person market catcher. The higher this thing has gone, the weaker the relative strength is. And note the volume analysis. Whoa, what is wrong with this trade, right? I mean, if you take a look at prior peaks, and you'll notice that, wow, prior peaks, like there's an old peak and there's an old level, and look at these levels in volume, and you'll notice that the current level, or this last leg to the upside, really had a diminished volume move. And that combined with the relative strength, and of course you all know what happened with Facebook, it was only down 20%. All right, let's get to another example. All right, this is really powerful, and this is the one we were really warning everyone about before earnings. It was Netflix, and Netflix came out on a Monday morning. I think you guys remember that. And the long and the short of it is that not only, I guess, a classic technical pattern would be considered an M-top formation, but who knew, right? Well, guess what? Using the right indicators can help you to decide whether or not this market is susceptible for declines. And here's one that is just an absolute classic. Look at the rally. Look at the volume relative to its older high. That's divergent, right? I mean, price is actually making a higher closing high, and the price is nowhere near it. Look at the person market catcher. It made a lower low high reading. So again, another massive failure. Some of the best trades off the planet came with these divergence patterns. Now, let's look at TWTR. One of our members in our room, Dave P. Dave, you know I'm going to give you props. You're like a brother from a different mother, right? We've known each other for a long time. And in our live trading room, Dave's the kind of guy that will say, hey, John, I know you're looking at this, but hey, give me another insights on earnings. And, you know, he's always asking me for, and doing a great job at it, I might add, of getting the best out of me to look at different markets. And one of the markets he asked me to look at was Twitter before earnings. And I said, you know, Twitter is a kind of stock that to me, it's got the same pattern, relative weakness. It's got the volume has been negative since way in June when it made this rise in price. It couldn't even really make a substantial momentum move. Look at the momentum, the histogram. This is volume again, the volume indicator, gang, right? And so I'm looking for the market to more likely get down around the 30, 32 handle. 32 was our number. Today it had a little bit follow through. Twitter's back down. I'll be honest with you. I mean, if we get some, whether it's 30 or 32, someone here, when we start to turn around and stabilize and we start to see impressive return with the volume, and quite frankly, I'm not all that bearish on Twitter. The volume action, as you can see on the volume histogram component for the record, you'll see that it's not as negative as it really could be. I mean, it really could be substantially more negative like it was back over in those days, right? So when it started to go down, it really showed some negative volume. This, to me, is not as negative as it could be because it seems that it's been in more of a liquidation mode by institutions for well over a month and a half. It's just it had some massive follow-through exodus from possibly those on a margin call, or who knows. But I don't think Twitter's done by a rally down the road by any stretch of the imagination. We just got to wait for a buying setup. But the volume coming out is not that heavy as one would anticipate. So anyway, I'm just sharing with you a part of the reasons why we were more negative with this market and the cues than most traders were anticipating. But wait till you see this. 1 second. All right, this is the weekly thoughts and observations. It's an advisory service, a newsletter, comes with a track record, and obviously we back this up with weekly commentaries in a live trading room and other trades. We generally go over what we're talking about, and a lot of work goes into this, gang. And I mean, we don't look for trades just to trade. We look for trades that are based off the methodology. As you can see, this is actually for the week starting July 16th, that Monday. Okay, so we put out the person's pivots, support and resistance, market conditions. What are we looking for? You know, we're talking bullish still, the upside. You'll see the bullish support and bullish monthly support and resistance. Here's monthly support, monthly resistance for the top indices that we're looking at. How many stocks are at new highs, new lows? McClellan oscillator, we look at the VIX, the breadth of the market. We can go on down the line and take a look at a little other things that we've been doing for the last 15, 20 years or so, and using both Trade Navigator and our other platforms. But here's one of the interesting things about, I want to just scroll this on down here for you guys, just to go back and say, what were we looking for? Well, we were talking about bullish buy signals between these names right here back then, right? Certain trades to look at like Ryder and Coca-Cola ahead of, you know, where the market really went up to. Marathon Oil, for example. Now you'll notice that we also said here, and this is what's really important, while there are virtually very few low close doji signals, that's bearish by the way, there are numerous stocks that are already in a weekly sell mode, and now more stocks are at or near respective 52-week highs that are nearing long-term resistance while entering a seasonally weak period. Most have recently rallied on light volume. Specific names include Apple, ADM, Costco, Electronic Arts, MasterCard, and then highlighted Netflix, Ross Stores, Target, and UNH, United Healthcare. These are names to watch for earnings downside surprises. They are vulnerable for key reversals. And then Netflix have earnings after the close Monday the 16th. Blah, blah, blah. And then the 800-pound gorilla strength is Amazon. Watch for 1850-60s, quarterly pivot resistance, And that's when we were saying, watch this. If the NASDAQ 100 Qs reach near that level within the next 10 trading days, then look to buy the 179 puts for a price of 290, and we were thinking that at the time, I think the delta was around 44, something like that, and we were looking for an advance in the Qs to go up, for the puts to go down in price, and boom, we wanted to buy those. As well as this, and I know I've done a video saying we changed the strikes from 5 wide to 7 wide, but I thought this was a very important newsletter to share with you, and what we were looking at. You can see a lot of things that we have current positions. We take complete accountability for everything we do here. We actually increase people's awareness on spread trades for seasonality. A lot of really good trade setups there. Our year-to-date performance. So, you know, cumulative percent change, every trade we take, put down, track record for longs, shorts, and options. And you'll notice here, we do not put the track record including options. That's kind of cheating. So anyway, it looks a little bit better now because of the fact of the Qs. We haven't had as many option trades, and this is not really an options newsletter. We do a lot of that in the live trading room. But anyway, if you were interested in learning how did we come up with some of these trades, what did we say? This is not Johnny come lately. After the fact, we were looking for this Netflix trade before the fact based on these indicators. And so that, I think, is kind of important for a lot of you guys if you're interested in learning about what we have really done well here for decades, and I mean decades. In fact, that candlestick and candlestick pivot point trading triggers book came out in 06. That's 12 years ago. Mastering the Stock Market came out in 2012, I believe, and phenomenal things. And this methodology that we use, we put together for algo systems, we put together in TradeStation, Thinkorswim, Trade Navigator. It has stood the test of time. If you want further information, I definitely would employ you to check this out, because we've launched J-Person Asset Management, and I'm getting into money management. So I'm toning down the education aspect of my career. If you want to probably take advantage of what will be one of the most incredible seminars, and I mean amazing stuff happens when we teach this work. It's going to be November 29th through December 1st here in Florida, locally to me, and a great time to come into Florida. Check this out. Go to the website at personsplanet.com, and you'll find all kinds of information, and all you have to do is go up to events, go to seminar in Florida, right there, and you'll read more about the 3-day intensive seminar. Thank you for watching, and I hope you at least got a great insight as to what we've been doing here. More importantly, if you want more information about the advisory service, certainly go visit Persons Planet. Thanks for watching.